Hi, friends. Professor Joe here. I hope you all are doing fine. I have over a decade of experience in Forex trading, and this series of videos that I am creating for beginners and for people who are confused in Forex trading is going to be extremely helpful. In this video, we are going to understand different types of charts that are used in Forex trading and the most popular type of chart that is used in Forex trading. So there are many kinds of charts which a trader can use in Forex trading. But the most popular charts are line chart, bar chart, candlestick chart. And then there are a few more charts. We will discuss a few charts in this video. So let us understand what is a line chart. A line is drawn from one closing point to the next day or the next time frame's closing point. Each day or each time frame, there are basically four price points like open, low, high, and close. Out of these, above 4 points, closing is considered to be the most important. So the closing points is used to plot a line chart. So let us see on a diagram how a line chart is plotted. So as you can see in the screen, there are multiple points with a price point of 10, 12, 15, 20, 28, 27, and 14. So when you see a line chart, you will see that all these closing points are connected with a line, something like this. Like you can see, all the closing points that we just discussed has been connected with a line. So this is how a line chart is created. And when thousands and millions of such points are connected using a line, the chart looks something like this. So this is called a line chart, and this is how a line chart is created. Let us look at some other features of the line chart. The line chart is very clear. It clearly shows the direction of the trend just in one glance. That is why line chart is very simple to use. There is no noise compared to a bar chart or a candle chart. We will see what a bar chart and a candle chart is. But whenever there is huge price movement in a bar chart and in a candle chart, you will see long tails or long shadows or long wicks. In the case of a line chart, you will not see those. There are some disadvantages, like in a line chart, there is no open price, close price, high price, and low price. So it becomes difficult to understand the psychology of that particular time frame. It becomes difficult to understand where to enter and where to exit a trade. And in a line chart, to set a stop loss also becomes a bigger challenge. So these are some of the advantages and disadvantages of a line chart. Now let us see the next kind of chart, which is a bar chart. Now as you can see, this is how a bar looks like. So we can see a bullish bar and a bearish bar. And when hundreds and thousands of such bars are created because of price movements, you can see that a bar chart is created. And this is how a bar chart looks like. Let us look at some of the advantages and disadvantages of a bar chart. It is one of the most common chart used by traders even in intraday trading. In a bar chart, four data points are clearly available: the open price, the high price, the low price, and the closing price. This makes it very convenient to analyze the chart and understand the psychology of that particular time frame of the traders. In a bar, there is a center line. The top of that line shows the high point, and the lowest point of that line shows the lowest point of the day. The left tick indicates the opening of the price, and the right tick indicates the closing of the price. There are two types of bars. One is a bullish bar and one is a bearish bar. Normally, it is indicated by colors. So if you are looking At a bullish bar, it will be normally in blue color or green color. The opening of a bullish bar is always low and the closing is high. Same way, when you look at a bearish bar, it is normally colored in red. The opening of this bar will be on the higher point and the closing of this bar will be at the lower point, as you can see in the picture. This is how a bar chart looks like. Like I said, a bar, multiple bars, and when you put thousands of bar on a chart, this is how a bar chart looks like. It is very, very useful for traders, and a lot of traders use it for intraday trading also. Now let us look at the next kind of chart, which is a candlestick chart. Candlestick charts are the most popular type of chart for intraday trading and long-term trading. There is a lot of research and work done on candlestick charts, and candlestick charts are also known as Japanese candlestick charts. Like bar, even a candlestick has 4 points and which can be easily seen: the opening point, the high point, the low point, and the closing point. Like you can see in this picture, a green candle is that of a bullish candle, and a red candle is that of a bearish candle. And when thousands of such candles are put together on a chart, you can see a candlestick chart being created. Let us look at some other key features of a candlestick chart. A candlestick chart is commonly used chart by the traders. In a candlestick chart, there are 4 points available: the open, the high, the low, and the close. This makes it very convenient to analyze the psychology of the traders or the investors for that particular time frame. In a candlestick chart, there is a central body, which is normally rectangular. The top tip of the shadow is the high point. The low point of the shadow is the low point of the candle. The body of the candlestick is in rectangular shape. When hundreds and thousands of such candle is created because of the price movement, and when they are seen on a chart, that is what we call as a candlestick chart. Let us look at some key features of a candlestick chart. The candlestick chart is very, very clear. It is easy to identify the daily price patterns. It is easy to understand historic data. Candlestick charts are easy to understand support and resistance. In a candlestick chart, like a bar chart, there is a flexibility of timing. So you can look at a 1-minute bar or a 1-minute candlestick. You can look at a 5-minute candlestick. You can look at a 15-minute candlestick going on 30 minutes, 1 hour, 4 hour, 1 day, 1 week, 1 month. So you have a lot of options when you're using candlestick charts and also bar charts. Candlestick chart can be easily combined with a lot of other indicators and tools that are used for trading. Now, there is a lot of research and study done on candlesticks. So we will have multiple special videos made on candlestick psychology also. One of the major disadvantages of candlestick and bar charts are that there is a lot of noise. Means whenever there is a lot of high price movement, you will see long tails, which sometimes make it difficult to analyze the chart. So these are some of the key features of a candlestick chart. Let us look at the next type of chart. This chart is called as Hen Hashi Chart. Let us look at some of the key features of an Hen Hashi chart. It is also called Hen Hashi candles. In Japanese, it means average bar. Even when creating an Hen Hashi candle, all 4 points are considered, like the open point, high point, low point, and the close point. So this is how an Hen Hashi candle is calculated. Some of the key features of Hen Hashi candles are: an Hen Hashi candle is easy for identifying trends. Second, there are no gaps because the way the candle is calculated. Third, it helps in understanding the strength of the trend. Candles without a wick on the opposite side of the candle shows that there is a strong trend towards either bullish or bearish side. Hen Hashi also helps to understand the weakness in the trend when there are long tails on either side of the candle. So these are some of the key features of an Hen Hashi candle. Let us look at the next type of candle which is used in trading, that is called as Renco charts. This is how a Renco chart looks like. Let us look at some of the key features of the Renco chart. Renco charts are made out of bricks, which are its candle. It solely focuses on price, not time. So, if there is no movement, no new Renco candle will be formed. It is easy to identify trends using Renco charts. There are no gaps in a Renco chart, and it totally filters the noise in the market. Since there are no long tails or wicks normally on a Renco brick. These are some of the key features of a Renco chart. Let us look at the next type of chart. Line break chart, and this is how a line break chart looks like. Let us look at some of the key features of the line break chart. Line break charts also looks at specific price movements to draw a new line. The price movement is called as a line break or a line box size. Line break also focuses on price movement and do not restrict itself to time frames. Since it is price driven, it helps in identifying the trend and reversals. Line break chart also do not have any gaps. So these are some of the key features of a line break chart. Let us look at another kind of chart that is used in trading, the Kagi chart. And this is how the Kagi chart looks like. Let us look at some of the key features of a Kagi chart. Kagi chart displays price movements using vertical lines. Kagi charts, like Renco charts and line break charts, focuses on price movement and not on the time frame. No gaps are visible in a Kagi chart. Trends are clearly visible on a Kagi chart. So, these are some of the features of a Kagi chart. Let us look at the next kind of chart. This is called as point and figure chart. This is how a point and figure charts look like. Let us look at some of the key features of a point and figure chart. A point and figure chart is a bit different from the other kind of charts that we have seen. The price movements are displayed using X and zeros. Like Renco, line break, and Kagi charts, point and figure charts is also focused solely on price movements. It is easy to identify trends. There are no gaps in the chart, and it is very simple to understand a point and figure chart. So these are some of the key features of point and figure chart. If you look at the summary of this video, we have discussed multiple kind of charts like line chart, bar chart, candlestick chart, Hen Hashi chart, Renco chart, line break chart, Kagi chart, and point and figure charts. These are different kinds of charts that can be used for trading. So there are multiple options that a trader has. Normally, if you see, traders will use line chart, bar chart, or a candlestick chart. In this series of videos, we will be focusing more on candlestick charts. Since there is a lot of research done on Japanese candlestick and the psychology patterns of each and every candlestick, we will focus more on candlestick charts. I have also written a book, Traders You Can Win, but first, learn to lose. In this book, I have covered all these kind of charts that we have explained in this video. Plus, there are 2 trading strategies which I have explained in detail in this book. This book is available on Amazon. If you're interested, you know where to get it. If you love the content that I am creating, please like and share. And to get updates on more such videos in technical analysis, fundamental analysis, finance, personality development, please subscribe to my channel. All I can say is keep learning, keep growing. Thank you. Namaskar.